Trading Nut, episode 166.
Well, I went through the process of sort of demo to get the understanding of what's going on. My first account, I built up from £1,000 and then wrecked it. Put in another 1,000, wrecked that one. And I must have funded quite a few. And then I built it up one time and I was doing incredibly well with it. And I wiped it out in one trade or 4 days.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got the scruffy trader on the show, Gary Langley from the north of the UK. So we've got a fantastic little show coming up for you. Now, Gary is very transparent in what he shares, which is amazing, and he's got a unique money management or / entry technique that we get into a lot of detail on, and we actually see a video after the show that we shot where Gary walks through how that works and how essentially his whole strategy fits together and works as well. It's really good. It's going to give you some ideas, potentially an avenue to follow as well. Now, other things going on here at Trading Nut, we've got the Genius Trader still at a 75% discount. We've got a new Trader Mind Hacks video out this week called How to See Yourself as a Millionaire Trader in the Next 10 Years. So you want to go and check that out. And Robot Builders Club, the $100 account challenge, either it was going to double or blow. Wasn't great timing, running it during the start of the war. It was literally 2 days after, if not the day after the war started. The whole thing just it went kaput. It blew the account, so that didn't work. But we have got the Asia Assassin bot up in the Robot Lab this month of March 2022, and in fact, it incorporates Gary's money management technique. So I've automated his money management technique along with the Brandon Abbas entry technique, which I found out this week is missing a couple of parts, but we might do something else with that in the future. We'll see how it goes. Look, there's a video to find out how it works that I've launched on the channel. It's over there on the Trading Nut page under the robots link. There's also a performance report so you can see how it's performing on a demo account over this month of March 2022. So go and check that out. Now, this is the newest thing that is hitting the Trading Nut channel, is a demo trading competition with my sponsors, City Traders Imperium. So they've got thousands of dollars worth of prizes up for grabs. I don't know if the registration is going to be ready this week. If it is, you'll see the ad in a second, which will tell you all about it. If not, then it'll be coming up in a future video or on the email list or somewhere. You'll see it somewhere on the social media side of things to how to register for this demo trading contest where there's going to be thousands of dollars worth of prizes up for grabs. So, guys, we'll see if we can get some of the older guests on the show as well to see if they can take part in it. It should be a lot of fun and, really give you guys a bit of a test. So, that could be coming up right now. Let's have a look. Let's jump into the ad. Okay, so no demo contest this week, but CTI is giving away $40,000 to one lucky winner. You heard it right. That's a direct funded account of $40K worth over $2,300. What an amazing giveaway. No evaluation needed. You become a portfolio manager immediately once you're selected. And here's how easy it is to win. 1. Subscribe to CTI's YouTube channel. 2. Look for the video titled What is Prop Trading and How to Become a Prop Trader. 3. Give it a thumbs up. 4. Comment on why you deserve to win this free funded account. And 5. A winner will be chosen live on Thursday, 24th of March, 2022. So you have to hit that notification bell as well. I'll leave a link in the description with the steps you need to take. All right, folks, here we are on Trading Nut. We've got Gary Langley here on the show, the scruffy trader, as you can see from his t-shirt if you're watching the video. Welcome to the show, Gary.
Hi, welcome.
Hey, so look, this is our second attempt at doing this. The first time you were stuck in one of those horrific storms in the UK. So you guys in the UK, I mean, it even made the TV over here. So it was pretty bad, and we kept losing connection after about, I think even in the pre-chat, we kept losing connection.
It was an interesting night, let's put it that way. It was wild.
Yeah.
But we're still here. I'm obviously windswept because I've got no hair left. It's gone.
Yep, same with me. Righty-ho, well, let's get on with this trading story. So you called the Scruffy Trader. I'm interested to find out how you came up with that name. But how did you get into it in the first place?
Well, Scruffy Trader is from my wife, to be honest, because I'm a natural-born scruff.
Right.
I leave stuff about all over the place, and it just kind of developed from that. But coming into trading was by accident. I never wanted to be a trader. It came from a former business that I had. And I used to buy goods in far-off lands. And through that, used to do, I don't know if you've come across it, forward purchasing of currency.
No.
It's kind of where you agree an exchange rate for a set level of time. And your price is locked in for sort of 3 months, 6 months. Well, if you time it right, you can get more bang for your buck when you're doing transactions in Japan, as I did, buying containers of goods. So that's kind of where it started. But the interest was from a sales meeting. Because when my business started, you deal with wholesalers. And you have a set price, and you're always trying to get the price down. The more you buy, the better price you get. But as you get bigger, you don't deal with a wholesaler anymore. You'll deal with a distributor. And I was having the same conversation, and the guy's going, I can't do it because the exchange rate is terrible. And I went, what's this got to do with me? I want to buy a container of goods, you're the importer. I'm buying more, surely I get a better price. I can't do it. The exchange rate just don't work. And I had a chap work for me who was an ex-commercial bank manager. And he piped up and he says, you must do forward purchasing. And to me, it was like, what are you talking about? I want to buy a container of goods here, and you're talking about forward purchase. What on earth does that mean? And he had this bizarre conversation about locking in currency rates. And I did a deal based on that currency. So if he ended up getting better price, I would get an extra discount. And as the company grew, we then ended up going to manufacturers, and we were doing the forward purchasing. And that's kind of where it stemmed. And then from there, when the company closed, I'm the wrong side of 40. What do I do for a living? And here we are.
Yeah.
So that was sort of...
That's how you got into it.
2017 when it closed.
That's interesting. It's the last sort of 5 years.
Okay, 5 years doing this as a wage.
Yeah. So the forward purchasing stuff, like, I mean, if you just want to talk us through how that worked, like, so you would just say, we want say the euro US dollar was at $1. You wanted to buy the product at 90 cents.
You would,
and then you'd say, right, we'll agree that if it drops to 90 cents, then you'll send us a product, or we'll buy it at $1 and you'll give us a discount.
You do it with the bank. You lock it in with the bank.
Okay.
So you'll agree. So for whatever level it's at, you might pay a little bit above, but it's locked in for about 3 to 6 months. So you're working out long term. And my trading is like that. All my trading is, for all you see me way down on small time frames, it's all done off dailies.
Right.
The levels, because all I'm looking for is levels.
Right.
And that's what you do. So you wait to say the dollar, for argument's sake, comes down to a certain level. You're going to buy at that exchange rate, and it's locked. Well, if it's in your favor when you come to buy your goods, excellent. Because obviously when you're buying a container, they like it priced in US dollars, even though it's Japanese yen. But 3 months down the line, there could be a movement in the price. So you from a budgeting point of view, it's excellent because you already know how much it costs. You're not relying sort of, well, the exchange rate today is X. We know exactly how much that's going to cost.
Yeah.
But if the yen isn't there, we get more bang for our buck. You can sometimes get extra product if you've timed it right.
Yeah.
And that's kind of where it came from.
And so how did you transition from, so you left the business, and then how did you transition into a trading life? And did you find it easy?
No, not in the slightest. As I'm going through this journey, and we did it for best part of 10 years, and you start sort of thinking to yourself, well, I'm buying these off daily and weekly levels and one thing and another. I can do this myself personally on a 1 minute chart, as most people go down this journey. And I made a complete arse of it. To be honest, I just, the difference between that type of trading and retail trading, they're just worlds apart, completely worlds apart. But if you start stripping it down into the basics of levels and watching for a price to be stretched, you can start seeing opportunities. And then through the years, I've developed that into, well, kind of what I do today. But it did take a long time. It took a good 18 months, 2 years to figure it out.
And did you have any education along the way?
I did. I went down the route of buying courses off the shelf, which I found to be not the best in the world. They're all pretty much the same. But I was fortunate in the sense that because I had Jim working in the office with me, he kind of coached me along the way. And all the time it was, no, look at the price, look at the level. Doesn't matter sort of what your moving average is, like crosses, you know, because the average of 20 crosses are 50, all of these sort of things. You know, it's got, no, they help you, but your levels is where your price is. And it's the price itself is what you want to be paying attention to, because the price is your best indicator. You know, and that's kind of the way that I look at things. And I focus heavily on levels, get my charts marked up. And then from the levels, you can look to see how the price reacts. And you don't need volume indicators and everything, because the price will tell you. You see a huge candle coming. If you looked at the volume, you would see the volume spike anyway. And likewise, if you put a Bollinger Band or something like that on, you don't need a moving average, because it has a moving average. So you're cleaning your charts up all the time, keeping them nice and clean. And that's the general idea of basic trading. Keep it simple as possible. You know, just wait for it gets to a decent level that you're happy to buy at or sell, and then just look to see if there's an opportunity to get in.
And so
very simple.
What sort of account size did you start off with when you were, or did you go demo first, then live?
Well, I went through the process of sort of demo to get the understanding of what's going on. My first account I built up from £1,000 and then wrecked it. Put in another 1,000, wrecked that one. And I must have funded quite a few. And then I built it up one time and I was doing incredibly well with it. And I wiped it out in one trade over 4 days. And I was like, God's sake. And it was the thick end of 18 grand.
Oh, so you built it up from 1,000 to 18,000 pounds.
Yeah.
Right.
And I wiped it out
one day.
And I wiped it out in 4 days.
4 days. How did you do that? How did you wipe it out?
Stupidity, I guess, is the ultimate word. See, at the time, because I had the company behind me, funding accounts wasn't really an issue, you know, and the company side of it was incredibly strict, you know, and you work at it and you work at it. But the personal side, I guess I was almost punt trading, if you want to call it that. You know, you're like, it's be fine. And you buy this course and it says it's going to do this, so you try and follow it, and it works for a while, but then it doesn't work. And I'd started building and I'd started getting myself reasonably cocksure and too confident, if the word is known. And I built it up. And then I decided I was going on a little break, you know, 3-day jaunt. And I put a size on that was way too big for the DAX. I went away and it gapped up while I was short. Not only did it gap up, it kept on going, and I didn't come back till the Tuesday, and it just wiped the account out.
So,
Literally.
and
it was because I didn't put a stop in.
And you weren't checking
I just literally, I was just cocksure.
Yeah.
I knew what I was doing. I traded this without a stop because it started going for me on the Friday. It just went away, just blew it to bits. But it was actually the greatest gift from the worst nightmare because I never did it again. And from that point, I am an advocate of a wide stop. I don't believe in tight stops. I think it's death by 1,000 cuts. But what it did teach me was to manage your trades properly and calm yourself down, but also size appropriately as well. You know, because let's be honest, if you got an account and the size is too big, you can have the best system in the world, but the account's not going to take it, you know, because it has to breathe a little bit. And no, you just get bumped, and having to explain that one to my wife was, let's just say it was a good conversation.
Yeah. And so I mean, because 18 grand is like, I mean, or let's say 17 grand profit in the UK. I mean, when I was living there and working, that was my salary for the first few years.
Oh yeah, it was a colossal amount of money, and you sort of think, whoa, you know. So pretty much the best part of a year's worth of work was gone in 4 days.
Yeah, unbelievable. And so to get it from 1 to 18, what was so you said it was basically a punt to get there. What were you doing?
I
that
would
was
have
crazy?
said I was being lucky. I would have said at the time, you know, because what was happening through the process, I was doing well, and it would go, and you think, right, yeah, edge it up a little bit, you do well. And you could see it, and it was growing, and you think, right, we'll just push the boat that little bit further, because obviously if I push it further, I'm going to get more money. But eventually it got to the point where it would just break the donkey's back, you know, by being, call it greed or stupidity. My wife would call it stupidity. I just put a position on that was way too big for it. Yeah.
And so do you think
flattened it?
Do you think you're so what happened after that in terms of like trying to get back from that, you know, you've seen the success, the potential success there, and you've gone and destroyed the whole lot, rethought it. How did you get back in? Did you have to reinvent everything, or?
Pretty much.
Right.
I took a month off. I never touched the keyboard for a month. I was almost frightened of it. You know, thinking, I can't. So, and I was also in a wrong headspace at the time as well, because the company was not in the best of shapes. You know, the rise of Amazons and eBays. It was a mail order company, what I had, and we used to import plastic injection molds. And profits are getting squeezed. We had Brexit come in. Everything hit us at once. And that was one of the reasons what I was doing the trading for, because I genuinely thought that if I could get a big hit on it, it would do the company well. And I was on the wrong side. So for a month, I literally just sort of hid in a corner somewhere and cried.
Right.
And then I just thought, right, okay, I must have done something right in the first place to build this up. So I went back to square one, not using sort of too many indicators or anything like that, stripped it right back and not looking at 5-minute charts and 15-minute charts, back to the daily chart and start there, and then take a bias from an hourly chart, because you've got enough time on an hour to get a good gauge for what's going on in the market, and then maybe enter on a 15 or a 5, but they hold no weight to the trade at all apart from fine-tuning, and then be conservative with your target rather than swinging for the fences. Because I found that if I'm swinging for the fences on a day trade, it takes it off you every time. Whereas if it's a swing trade and you're looking to hold it for a few days, you've kind of planned that. But the oscillations throughout the day, if I'm trying to get 100 points out of something in a day, I've pretty much failed before I've even pressed the button. You know, but if I go for sort of 10 to 20 pips safely, that's good. And then only look to do it once or twice a day. And once I started doing that, not trying to catch every wave, every trade, just calm everything down once or twice a day, 10 to 20 pips, conservative with the target, conservative with the position size, but then also stage backwards into a position.
You'll have to explain
I'm
that.
assuming it's going wrong.
Right.
So for argument's sake, I'll start with my 100% bid size that I'm willing to go on that trade, but then I'll break that down. So it actually reduces risk. And also, as it goes further into the ladder and then comes back up to your 10, 20 pip target, you make more money. So it's a complete reinvention, but more math-based than anything else. And then I started using filters, and I still use them today. I use a crazy spreadsheet that filters the market out, helps me get a bias. Once I've picked that bias, I stick with it for the day. And that's it. Because I can be wrong on the main direction, but I can be right on the trade. Because it will go 10 or 20 pips one way and 10 or 20 pips the other. You've just got to wait to catch it. But when I first started, oh, no, I wanted the bottom, I wanted the top, I wanted everything that was in it.
Yeah.
And you can have a lucky run. And sometimes you just need a real good punch in the nose to wake you up.
I think that's a really good sort of good lesson there for the guys listening in terms of like getting that daily direction. Just one thing, get a direction and stick with it on whatever pair you're deciding to trade, and don't change from that. And that's all you're going to do for the day. You might not get a trade because it doesn't give you an entry because it's not going in that direction. But it will keep you on the right side if you've got something to back it up behind you. That's interesting. So, okay, so in terms of the scaling into the trade, I mean, so you're saying 10 to 20 pips. I think I watched one of your videos and you were saying, like, you know, we're only going for 10 pips here or 20 pips here. How far would you go back to scale into that trade? I mean, what's the ultimate stop loss on a 10 to 20 take profit?
It's a lot of the time you look at it, you'll go, this is bloody mental. Because I'll go back 2 structure points. So it's essentially you can either be 2 levels or 2 swing points on an hour. But a stop has to be where a stop has to be, because I know the market will probe to a level. If it goes to the first one, it's nothing out the ordinary. If it goes to the second one, I'm probably wrong. But that could be 50, 60 pips away, you know, depending on the market. So, but because I'll stage in, the risk reward isn't as bad as it looks. And I don't believe in risk reward. I think that sets you up for a fall, because it forces you to have a tight stop and you're constantly getting stopped out if you haven't got a plan. But for argument's sake, say you've got £5 as your full size. Go in at £1 for your first position. Let it go 10 pips or 15 pips against you. Put another £1 in, another £1 in, and so forth till it gets down to the stop. Now, if you've timed it right, if it gets to halfway and then runs off to 10, 20 pips, your risk reward is pretty large, because the bottom one has got so much further to go. But also, if you're wrong and you think you're wrong, these bottom ones, as they come up, will pay off the losses of the top ones.
So you get out for a break even, do you?
You'll get out for a scratch or a very small loss or a very small profit. But if it hits your stop loss, well, it's still cheaper than going 100% at point of entry.
Yeah.
And that's kind of the way I do it. It's math based, if you like.
Yeah.
But to me, I just think it's common sense. But a lot of people look at me and they point the finger and go, "You're a bloody lunatic." I'm like, well, no. And that comes back to when we were forward purchasing. If the dollars were at this level, I'll lock it in and buy some, sit them in a wallet. But if it went down here, I'd lock it in down here as well. And then the further it went against me, the more I liked it. Yeah. Because it meant I'm getting more bang for my buck.
Yeah. Yeah, and I suppose, like, I mean, if so, do you equal? Because I've done this before. I've actually done this before, this approach, And not for long, though. I sort of thought, this is great. And then I can't remember what happened. This was years ago. Something went wrong. And I think it might have been, I might not have honoured a stop or something. And then it was like, I just kept adding to the positions. But are you splitting it up equally all the time? Or do you sort of scale
Yes.
it always equal?
No.
Okay.
Yeah.
Okay.
So for argument's sake, if I'm going 5 splits, each one's 20% of the original bid size.
Yeah.
If that makes sense. And I just find it's common sense. And I look at the stop. I don't call it risk. I call it investment. So I'm willing to invest that amount of money to get X amount of money.
Yeah.
Now, what I get out on the other end is, well, the stop has to be where the stop has to be. That's how much the investment is. If I get it wrong, it's a paid lesson in not what to do. But if I get it right, I have increased my money by X amount of percent.
Yeah.
So I'm looking at it from a retail point of view, like a business owner's point of view, because you buy a product. Very rarely in business you'll buy a product and double and treble your money. You might get 10, 20, 30% out of it. So if I can increase that by 10, 20, 30%, to me, I think that's a good trade. But then it's all down to your trade management, and your trade needs to be right in the first place before you enter it.
Yeah.
It's not a case of just, right, this is a level, I'm going to buy it, I'm going to go backwards into it. No. You've got to have an understanding, as we say, and you filter it out. I've got my direction. I'm looking to see if the market is extremely stretched at that point. If it is, it kind of becomes low risk. And we always assume the price is going to go against us slightly. And if it does, and it goes, say it goes against you 20 pips, well, I mightn't get all 5 positions in, but I might get 2 or 3 of them in.
Yeah.
And then when they run off, brilliant. I'm just getting better prices for the others with less exposure.
And so how often would it get to that sort of final price level to give you the full profit? And if you're going to... And you'll
profit, I hit it all the time.
And you're not going to get out for break even, that is.
Well, break even is sort of... My theory is it should never hit the stop. Ever. Because one, if I've planned the trade correct, it's going to at least get me out for a small loss or break even. But if I haven't planned it, I should be sensible enough to recognize it and kill it. And I'm very good at doing that. If I see this and I sort of think, no, this thing's gone past the 50% mark, because I'll put fibs on it. I do like Fibonacci, because again, it's a math-based way of trading. Once it's through the 50% and it's starting to move down, I'm thinking, I might be better off killing this. And I'll either kill it or I'll actually scale out of it. If I'm like sort of halfway between the two, thinking this might turn because it's bouncing on a level.
Yeah.
Instead of leaving the full position on, I might take half that position off and just accept the loss.
Yeah.
If it turns round, comes back up, might balance out. And if it still goes and hits my stop, well, it hasn't cost me as much anyway.
Yeah.
So I'm kind of glued to the screen all the time when I'm seeing it.
Yeah.
But once it gets into a positive expectancy, I kind of just let it get on with it till it hits its target. You know, because I'll put in a target which is 10, 20 pips up to the next level. So all I'm ever doing is going from one level to the next level. That's it. Very simple.
Are you setting, like, when you see the setup happen, you're going, okay, great, I'm going to now place 5 limit orders in the areas that I think, or are you waiting for the price to get to levels and you're going to hit the buy now,
I wait
sell
for
now
it to
button?
come to a level. When it's sitting on the level, I'll put my, kind of call it, dip my toe in the water, if you like. And I'll see what happens once I put the first position in. But that first position is only like 20% of what I'm willing to go at.
Yeah.
If it runs straight away for me, great. It's just great, because what I'm looking at all the time is process over money. I don't actually look at the money. That's the byproduct of me following my plan. And that way, it keeps me sensible. Because if I'm looking at the money all the time, I'll be too tempted to go, I better just rack some more in here.
Yeah.
And then I might go back to where I was sort of 7 years ago.
Yeah.
I never want to go there again.
Yeah.
So that was another trick that I learned, actually. And it's something that Jim told me, the chap I was telling you works in my office. He says, don't look at your P&L. You follow what you're trying to achieve, you know. Follow your process. That is it. Target accordingly, and you'll be fine. And then that way, it stops you getting spooked. Because I think sometimes when you see P&L swings, you can frighten yourself out of a trade and kill it before it's got the target. And I'll guarantee we've all done it, because I've done it. You go, oh, yeah, there's a good bit of money on it. I'm going to take that off. Oh, bollocks, it's gone straight to target. The second you take it off.
Yeah.
You know, and likewise, why sometimes I scale out of a loss, because sometimes it does the same thing in reverse. You'll kill it, and then it runs back up the page, and you go. So scaling out of a loss, it kind of all helps with your mindset, to be honest. I think the mindset is probably the biggest battleground you'll ever have with the chart.
Yeah.
The charts aren't that difficult. It's you, the person, that's actually quite difficult.
Yeah.
Because we're full of emotions, and if you're angry or you're sad or whatever, you'll take it out on the chart.
Yeah. I actually built a trade management thing for like a little robot that runs that means I don't need to look at the P&L. It sits on my MetaTrader 4, and I just click buttons, and it gives me the information I want without any dollar signs or anything. And it's literally just, here's the pips, here's the numbers. No dollars. No dollars. I don't want to see any dollars. Okay, so what about your typical trading day? So when do you sit down at the markets?
I start roughly between 6 and 6:30 in the morning. What I'm doing at that time is really just pulling myself together, having a cup of coffee, reading through the news. And if there's anything that presents itself before 8 a.m., I may have a trade. But that's not necessarily what I'm doing. What I'm mainly doing is I'm making up a spreadsheet, working out the strengths of the markets and which one I'm going to trade, because I'll essentially only trade one product a day. I might look at them, but I'll only be trading one. And I'll concentrate all my efforts on that single instrument. Between 8 and 9, I don't trade at all. Not really, because I don't like to trade the open. I find it, but this is UK for people that are overseas. I live in the UK. The London Open, it can be a bloodbath, because it will inevitably go one way before it's going the right way. And trying to judge it is, well, it's not really. So I'll just sit and watch it. And then from 9 till about 4, I'm basically waiting for sort of everything to align to get 10, 20 pips. And patience is my best tool, because I can wait till sort of mid-morning or even mid-afternoon before I press the button. But then once I'm in it, I'm committed, and I'll manage it till it's finished. And then that's it. And as soon as I've done it, switch down, done for the day, do it again tomorrow, and just look at it as a job.
Yeah.
And that way, it keeps me grounded, but it also keeps me safe, because I have a rule. If I get the trade, brilliant. If I lose the trade, I won't go back to market. I'll pick the pieces up tomorrow. And that stops me sort of the emotional content of just diving in and thinking to myself, I've got to get this back.
So you're one trade a day only one trade a day?
1, 2 at best.
2, okay.
That'll be as much as I do.
So if you lose the first one,
that's it.
You're done. Okay, so you can only lose one trade a day, but you can win the first and take a second if you obviously probably do it early enough in the day. That's cool. That's a nice little rule. Yeah.
And it just comes down to mindset.
Yeah.
You know, if I've lost, and I'll sell a V. I'll just bad day in the office.
Yeah. It is very much a mindset thing. Look, I mean, because you can, and I've noticed it in the past, like I'll get more and more wound up if I sit there and take, more than 3 trades, and they're losses, any more than 3 losses in a day, like the haunches get on your neck and you start getting all agitated, and at that point you're done. You are done. You cannot carry on. So yeah, it's a great little habit to get into. Now, so you okay, right? So how many markets you're analysing to find that the one pair that you're going to focus on?
I essentially have a core set that I look at, and it's mainly cable, euro, dollar, pound, JPY, Aussie dollar, gold, DAX, and then I like trading the FTSE as well if it operates. But they're where I concentrate my time. And 9 times out of 10, I trade cable. Probably because it's our UK currency. It moves very well throughout the day. And it's not as brutal as some might make out. You'll always get your 10 pips within it, you know. And the DAX, on the other hand, again, it's very quick to get in and get out. But what it is with it, if you get it wrong, you really get it wrong.
Right.
And it'll take it off you in a heartbeat. So that's where I focus my time, but most of it is on
you. Yeah, and it's interesting. So you'll look at all these markets, but 9 times out of 10, you're going to get a trade on GU.
Yeah,
that's
every time.
Now, what about? So you mentioned that you really take a loss. I mean, what would you say your win-loss percentages?
I'm running currently over 85% at the minute.
That's very. That's a
been
high.
Like that. Fine.
That's very high. Yeah,
it is high. I mean, I sent you one of my statements.
Yeah, you did.
I'm running for a prop fund, and it's been like that for quite a while. I just kind of discipline myself into when I see it's wrong, I just kill it. I just let it go. And that's it really. And that does keep my wins up. But the part that keeps my wins up more than anything is I don't chase the markets. I wait for them. If it's not there, I just don't enter.
Yeah.
I'll wait and I'll wait and I'll wait till it stretches. And then if I'm only looking for 10 to 20 pips, you'll find that in a bounce if you're patient enough. And it's easy done. I just look at the charts at the top of each hour. Is it ready? Yes, great. I'm going to spend the next hour looking for an entry. Is it ready? No. Right. I'll have a cup of coffee, go talk to the missus, and I'll come back in an hour. And I just do that over and over and over, you know. But because of having a wide stop in it, if you sense so, when you get a punch in the nose, you get a punch in the nose. But if you can hold your win rate constantly, and as long as I can keep that above 75, 80%, it balances out.
Yeah,
and
I suppose.
That's kind of the way I look at it.
Yeah, because if you're taking, let's break it down into a lot, and you're taking 0.2 lots out of your 5 in your first position, you get your 10 pips, but then you take a full loss, it's going to be one whole lot with a 10 pip win. But no, sorry, it's not going to be one whole lot, is it? Because the last position's only going to be quite a small loss, isn't it? Yeah, so each loss is going to be smaller. Yeah.
It reduces by 20% every time you go down.
Yeah.
And the one at the bottom costs you next to nothing.
Yeah.
Literally next to nothing. So this is what I'm saying. Because you're staging into it, you're not fully exposed, and your loss is not as big as you think it is.
Yeah.
But your risk reward is up. It's well past 1 in 2.
Yeah.
You know, it's well up to 1 in 3 if they trigger.
Yeah. Yeah.
But if it's only the first one, well, then it looks terrible.
Yeah.
But as it goes further in, it increases. Like I say, I don't look at risk reward or anything like that, because I think it almost forces you into a trade, because you think, I must get this. I've got to get it to there.
Yeah.
And the worst thing in the world is watching the price move to within a pip or 2 pips of your target and then just rattle away. But if you were sensible with your target, you probably crushed it.
Yeah.
You know, and I guess they're just little tricks you learn through the time. I mean, I watch them all the time, and they say they've got this special system and this one and that one. Ultimately, the price will do three things. It's either going up, it's going down, or it's going nowhere. And if you're caught between two levels, you're essentially 50% anyway, because it's going to hit one of them.
Yeah.
You've just got to get the direction right. And just keep it simple.
I think where people struggle with this approach is possibly the fact that if they get like a win or a couple of wins under the belt and go, great, happy days, I've made like 20 pips, and then they get a loss followed by another loss, full loss. When I'm saying, like, you know, that goes through all 5 levels and doesn't work, or even one of them, and they go, oh, damn it, you know, I've lost more than I've actually won. I won 2. So, but it's a case of getting past that
once
barrier.
You get through it,
yeah.
And if you start breaking the maths down, your risk reward is higher. It's a lot higher than going 100% in the market with one go. And I find if I just put a $5 point straight into market and then it goes against me, and this is one of the reasons why it came, you watch it move and move and move away. And then you watch it coming back up, and all you're doing is going, please get me break even. Please get me break even. And then when you get there, you go, right, kill. And I needed something that could alleviate that, because to me, tight stops just don't work. It's death by 1,000 cuts, you know. Yeah. Don't get me wrong. I'm not saying go mental and don't have a stop, because trust me, I've done that and it hurts if you get it wrong. I'm just saying be sensible. You know, the market will show you where it's going to probe to, and that's your structure points. And that's why I use 2, because it's going to test the first one. If it goes to the second one, I'm probably wrong.
Yeah.
But it's just be sensible with where you're going to place it. And I needed something that could help my psyche. And I thought, right, if I laddered it in, down, and then as it's coming back up and I'm doing the same thing, please get me out, please get me break even, I actually want to be paid for my time. And as it moves up, and that's what it does, and it does pay for your time coming back up. And even if it just pays for your mentality in the sense that you're sort of not pulling your hair out, then it's a good thing.
Well, you're winning some trades, right?
To doing it.
You're winning some. You know, if the last one pays, so even if the last one pays and you got it wrong, you're at least going to win 1 out of 4 trades. And so there's a little bit of, you know, the dagger in the heart isn't as deep. Now, what about
something along them lines?
Yeah. what about somebody working a day job, and, you know, what steps would you recommend they take to become a trader?
Learn levels, but not so much your hourlies, your 15s and your 5s. Look at your monthlies, your weeklies, your dailies, down to your 4 hour. Understand those levels more than anything else. But then also look at the higher time frames rather than the lower time frames to get an idea of your trade. Now, if you're working around a day job and you're trying to trade a 5-minute chart as and when, it's not going to tell you a great deal. But if you were looking at, say, a 4-hour chart, the price is going to be in the exact same place, but it's that little bit slower, and then you can sort of watch how it reacts at a level. So if you're looking at a 4-hour chart with decent levels, you can use that around a day job, you know, because I'm pretty certain that your boss won't be too happy if you're whipping your mobile phone out every 2 minutes just to see what's going on. But at least then you can wait for that candle to close, and you maybe just looking at it 8 o'clock, 12 o'clock, so forth. But that's kind of where I would look at it. I would look at a higher time frame but solid levels.
And what others? So you mentioned levels, Fibonacci. Is there anything else that you'd recommend somebody go away and study on a price chart?
I would say the price itself. I only use a basic stuff. The Bollinger Band is very good because it will show you the stretch points. So if you can plot the stretch points and you see it come onto a level, happy days. But also look at sort of the way the candles are forming. There's 101 different patterns. But things like a hammer formation coming into a level is just plot it, and then see how many times that hammer formation forms while it's stretching the Bollinger Band at a level, and then see how many times that price reverses, and do it through time. So yeah, that's what I look at. Keep it simple. Keep it as simple as possible.
And you mentioned mindset. Like you've said that you're quite patient. Have you got anything? So. Have you got anything? I suppose either on the patience front or any other sort of mindset things that you've sort of learned over the years, the hacks and stuff that you could share with us.
Yeah, keep your toys on your table. I've got more toys on here than I've got. I listen to ridiculous music all the time.
What's ridiculous?
The Wurzels.
The Wurzels. Never heard of it.
I listen to anything. I've got Bucks Fizz on my playlist at the moment. I do it on purpose, to be honest, because it calms me down. And if I'm wanting a candle to close, for argument's sake, and I'm looking at a 15-minute candle that's halfway through, I'll put Bat Out of Hell by Meatloaf on, because it lasts 7 minutes and 11 seconds.
Right.
And I'll listen to the whole song, and it stops me fiddling with the chart. So put a music video on and watch it, and not watch your chart, and then that'll allow you to let the candle close. Yeah. That helps you with your patience, but then it just comes down to your personality. If you are a fiddly person, just walk away.
Yeah.
Go in the kitchen, make yourself a cup of coffee, and then by the time you come back, the time will have passed.
Yeah.
But on my desk, I have toys and God knows what, and I have them there just because I am a fidget. I will fiddle with the screen, so I'll just mess around and play with these, and it just calms me down a little bit.
I like that. That's a very good little trick in terms of, and you could even do it, I suppose, if you had certain number of things that were like, say you got 5 minute, 15 minute, 30 minute candles. They're probably the hard ones, right? So if there was something that you had that went for that amount of time, you go, I've got to wait one more. I've just seen the 30 close. I've got to wait 30 minutes. I've got an episode of so-and-so that goes for 26 minutes. I'm going to watch that and then come back to that. Is actually a very good idea. If you could get a whole bunch of things that were that amount of time.
For me, it's music videos.
Yeah.
I've just got a whole bunch of them, and I'll just switch it on and I'll have a bit of a sing-song, and then you go back to the chart.
Yeah, that's a very good little tip. Now, if there was one thing you recommend any retail trader spend the next month mastering, what would it be?
Back to levels. I think levels are your key to everything. If you get that right on your chart, the rest of it falls into place. Simply because that is where the price will naturally gravitate to. And if you watch how they work, sort of certainly your higher time frames, because they'll just edge. I mean, we've all done it. You enter a trade and you see it grinding and but it'll stop at a certain point. But if you plotted that point back, I'll guarantee it was a good level where it stalled. So the levels.
And so
absolutely
on that, it is very much just having a look back to the left and seeing where, like, what
go
these
back
things
about
bounce
12
from.
to 18 months. Look for your dailies, your weeklies, your monthlies, your 4 hour. Once you go below your 4 hour, the levels start getting pretty weak. But those levels are pretty solid. And if you've got them on your chart already, it just makes your life so much simpler.
Nice. Now, we'll jump into a quick fire round, then wrap up, and we're going to jump on a price chart as well, so you're going to show us some stuff afterwards. So how long did it take you to go from newbie to consistently profitable?
18 months, 2 years, roughly.
What's your favourite entry setup?
Favourite entry setup is an overstretched market with a momentum ignition off a level.
What's your recommended trading book or resource?
Scruffy Trader YouTube channel. No, sorry. What I would say, not so much trading books, but mindset books. Trading in the Zone. Mark Douglas is a good one. Or The Art of War. The Art of War is excellent for working your mind out.
What's your preferred broker and trading platform?
For Proprietary, I use the 5%ers. They are really good. Then you've got Black Bull. They are pretty good for worldwide, good leverage, and also IG. I use all three.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Do you want to walk us through? Oh, yes, you walked us through your worst ever trade. That was that £18,000 one, wasn't it?
Oh, it was a shocker. That. I mean, it was. All I'll say is the drink in Portugal was really good, but it didn't pay for the beer. When I came back, the fear factor in my face was terrible. But yeah, that was terrible.
Now, and finally, if you could leave our listeners with one piece of advice, what would it be?
Less is more. Never overtrade. Look for 1-2 good trades a day and you'll be fine. And once you're being paid, stop.
Brilliant. Look, before we wrap up, what's the best way for the traders to get hold of you?
You'll find me at my blog, scruffytrader.com, or just find me on YouTube. You'll find all my contact details in any description on my videos.
Brilliant. Well, look, a big thank you to Gary for sharing with us today. Everything we've discussed here, along with all those links, are going to be in the show notes. To find them, simply search for Gary in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success. All right, folks, so there you have it. Interview done and dusted with Gary. Now, as we mentioned, there's a video that we shot. Go and check that out right now. It is on the YouTube channel. It's also on Gary's show notes page, so go and check that out. You're going to find out exactly how he reads the chart, how he's set up his whole system, how he finds those pairs as well to trade during that day, and you'll see some of the money side of it as well. So a whole bunch of stuff to go and check out on that particular video. You've also got the Trading Mind Hack series with Andy Murphy. So how to see yourself as a millionaire trader in the next 10 years. Go and check that out, as well as the Asia Assassin bot. So there's so much to watch over here, guys. You've got to go and check this stuff out. Also, don't forget that demo trading contest. I don't even know when I'm recording this, if the registrations are open, but it is coming, so stay tuned. All right, folks, thanks for listening. Thanks for watching, and we'll see you in the next one.